Tesla, the #1 leading electric vehicle manufacturer in the United States, led by the techno king himself, Elon Musk, has managed to get its spot among the few trillion-dollar companies of the world. Tesla's stock price hit an all-time high of more than $1,000 per share. Tesla investors everywhere are sharing a toast and having a good time. Short sellers, on the other hand, must have been really naughty this past year because they have been getting absolutely spanked. Despite the global chip shortage, Tesla skyrocketed after the release of its third quarter results and recent news involving a deal with Hertz. How did the techno king handle the situation? If you're a curious Tesla investor or an investor in general and you have no idea what happened, tune in and find out what triggered Tesla's trillion-dollar rise. In this video, we'll go over Tesla's third quarter results, one of the major problems that EVs have faced, and how the techno king was able to get through it better off than when it started. We'll also talk about the $1 trillion valuation and its deal with Hertz. Without further ado, let's get right into it. Welcome to Wealth Gambit. On this channel, we cover the latest stock trends and news. Whether it's a deep dive into the fundamentals of a stock or breaking news, we cover it all here on this channel. If you guys like that type of content, don't forget to like and subscribe to get notified as soon as we drop new videos. It shows that around 80% of you guys watching aren't subscribed, so if you want to see more content like this, then don't forget to do that. Also, please note that we are not financial advisors, so please always do your own due diligence. Lately, the world seems to be facing a global energy crunch. Gas-powered vehicle owners have been feeling the pain of buying gasoline. In Asia and Europe, there has been a major increase in natural gas and power prices, while in the United States, in some areas, it has doubled. Since pockets have been aching due to the expensive gas prices, a lot of vehicle owners have been taking the leap to electric vehicles. But it's not all sunshine and rainbows. Problems keep arising due to the shortage of chips, which are crucial for electric vehicle production. As we mentioned, there have been problems with the chip shortage. Chips play a very important part in technology, and since things have changed due to the illness turnout in 2020, more and more people are working from home and students have started taking online classes. As a result, the demand for technology has surged, and this is one of the major reasons for the chip shortage. This shortage has also affected electric vehicles. As you can see, not only Tesla was affected. Elon Musk isn't known as the techno king for Tesla for no reason though. Tesla was able to turn the tables, and the company rewrote some of its software to survive the chip shortage. That's a chip-stacular move if you ask me. This helped Tesla produce more EVs. In fact, Tesla factories have produced 237,823 cars in this quarter alone, which is a 64% increase year over year, and has delivered up to 241,300 cars to its customers. In their Q3 2021 results, Tesla reported a 57% year over year increase in their total revenue, which amounts to around $13.7 billion. Tesla's operating margin, or its ability to generate profit from its core operation, has also increased. Tesla reported a 14.6% operating margin in its Q3 2021 results, 5.4% higher than its operating margin a year ago. Tesla adjusted EBITDA for Q3 2021 amounts to around $3.2 billion, representing a year-over-year increase of 77% compared to its reported EBITDA during Q3 2020. Not just that, but Tesla also reported a year-over-year increase in its earnings per share to common stockholders based on GAAP or generally accepted accounting principles, has managed to grow by 433% in just 1 year. Tesla's vehicle market share has been rapidly increasing since 2018 in the United States, Canada, Europe, and China. During the Tesla Q&A webcast, Tesla executives were asked about their future plans for 2024, and this is their response.
Our goal as a company here is to grow on an average pace of 50% per year, and so you can extrapolate that out. There may be some periods of time in which we're well ahead of that. There could be some periods of time, despite best efforts, where we're slightly lower than that. That remains the long-term goal of the company. In Fremont, we're continuing to push the boundaries of what's possible there. Over the last 12 months, we've done about 430,000 cars of production. And, based upon everything that we know in the factory, where the bottlenecks are, what the potential is, we're targeting to increase that another 50%. I think that will be a difficult goal, but that's the goal that the internal team has, and they're going to continue to push on that. As we look towards Shanghai, we're continuing to push the boundaries there, and we continue to ramp production there as well. So most recently, the ramp of the Model Y, which was our biggest contributor of volume in Q3, will continue to ramp that factory. And our plans there with time are to keep growing the capacity in that factory. Austin and Berlin are interesting factories because our first iterations of capacity there are on Model Y, but we've intentionally set these factories in locations in which they have have a quite significant amount of land and ability to expand. We'll take Model Y at these factories. We're trying to get to 5,000 cars a week as soon as we can, and then we'll continue to push beyond that, potentially even getting to 10,000 cars per week at those factories. And then we'll add Cybertruck here in Austin and continue to grow from there. Our goal is to get to millions of cars per year over the next couple of years, and then ultimately in the long term, be able to achieve 20 million cars per year. We're going to grow as quickly as is feasibly possible with an eye towards a 50% annual growth rate.
Just days after the third quarter earnings report hit the market, Tesla dropped yet another sign that the shorts are in for a spanking. Hertz, a rental car giant, teamed up with the ever-controversial Elon Musk to showcase EVs in their offerings. According to the interim CEO, Mark Fields, the company is redirecting its path to be the future of mobility and travel. But I know what you're thinking. What's actually in the deal? Hertz just bought 100,000 Teslas and a new EV charging infrastructure to boost its global operations by the end of 2022. It will make up the largest EV rental fleet in North America and of course a global record once the deal is sealed. Marky Mark also said EVs are now becoming mainstream, and as per the doctrine of Aunt Kathy Wood, in a world driven by disruption, make sure you're on the right side of change. This alliance was a big step for Tesla and Hertz, but also it was the last big step to the $1 trillion market cap that eluded Tesla. According to sources, Tesla now joins the club of 5 publicly traded US companies with above $1 trillion market cap. An hour after Tesla's new milestone, Musk tweeted, "What's more to say when it's the single largest purchase of EVs on record? About $4.2 billion could possibly go into the pockets of Tesla bulls from this sale. I mean, earnings per share, or EPS, is going to get a pretty nice boost. Short sellers are going to need to bite down for this one. The sale represents 1/10 of what Tesla can produce in a year, and let's just mention that the car rental companies usually demand huge discounts for a deal like this, but in this case, no discounts were given to Hertz, because just like last month, Tesla Model 3 was Europe's best-selling car in September. At the time of recording, Tesla now holds a record share price of about $1,128 per share. That's about a 44% increase from this time last month. So for those of you diamond handing the stock like we did, can we get a toast? Tesla has proven itself time and time again. Back in 2019, Jeff Bezos, formerly known as Jeff Bezos, bought 100,000 EVs from Rivian, which made history on the EV front as well as the most EVs bought at that time. If Rivian has Amazon, then Tesla has Hertz. The battle between the two billionaires seems to just be starting. Who's your money on? Let us know in the comments down below, and best comment gets shouted out in the next video. That about wraps it up for today's video, guys. If you got any value from it whatsoever, don't forget to hit that like and subscribe button for more content, and in the name of the Techno King himself. Anyways, ladies and gents, until the next one, peace.